training video. On this section, we will continue from where we stopped. We have already an introduced concept, candlestick pattern. We have been looking at candlesticks pattern. We'll be looking at candlesticks pattern. We'll be looking at candlestick pattern and, excuse me. All right, that's perfect now. We have been looking at candlestick pattern. And from our previous section, we talked about what candlesticks is, how profitable a candlestick can make you become, and we've talked about some previous candles we discussed in our last concept, following the engulfing candlestick, the bullish and the bearish. We also talked about the dodgy candlestick. So quickly on this section, we'll look at a different kind of candlestick pattern. The topic of discussion is candlestick pattern. All right. So we will go further on the next candlestick pattern we would like to introduce. Is called the dragonfly doji. It's called the dragonfly doji pattern. Doji pattern, okay? So on this section, we'll look at intensively the dragonfly doji. All right. So let's proceed and see how far we can go before our section for today runs out. All right. So we'll continue from dragonfly. All right. I am displaying on my screen what I want you to know or see about dragonfly. All right. So this is more like, excuse me at that. So this is a dragonfly. This is how a dragonfly looks like. All right. This is a dragonfly. So let's see what it is. Now, the dragonfly doji is a bullish candlestick pattern, which is formed when the open, now this is open, when the open high and close are the same or about the same price. If you look at this candle from where it opened and closed, you find out that there is almost nobody. Like this candle, is almost the same, or should I say, has a pattern of wick put down and up. But we cannot call it a wick because it is a close and open. So how to identify dragonfly doji is simply when the open high and close are the same or about the same price. The open high are the same or about the same price. What characterizes the dragonfly doji is the long wick. Now this is the long wick below. The long lower tail is what you would need to check out for to validate if that is a dragonfly. Now, this long wick shows the resistance of buyers and their attempts to push price up. Now, remember that this candlestick always forms as a bearish candle. That is a candle that is dropping. right? So you can see where it opened above, right? So it opened above and dropping, right? So what happened here is buyers resisted price, or buyers resisted sellers from dragging price any lower. So what they did is they pulled price up to near its closing, to near its open price. All right. So the illustration above, this picture I'm displaying, shows a perfect dragonfly. Now, the long lower tail suggests that the forces of supply and demand are nearing a balance, and that the direction of the trend may be nearing a major turning point, right? So if we talk about this, we want to make sure that it has a lower tail just um, just below. So when we look at other examples of dragonfly, all right, okay, if you can see my chart, you will see here we have a dragonfly, all right. There's a dragonfly right at this zone. Hope you can see what I'm trying to display. Of course, you should. So there is a dragonfly here, all right, and then look at what happens immediately after that. Price reversed. So it's a reversal pattern, right? See the example below, right? This indicates that bullish reversal signal created by dragonfly, right? Now, in the chart, in this chart I'm displaying right on my screen that has a dragonfly, the market was testing the previous support level that caused a strong rejection from this area. Now, with careful analysis of support and resistance, you would find out that there is a support around this zone or a demand around this zone, right? Now, what are demands? Demands simply put areas where buyers are circled or centered, right? So it's just to say the law of gravity, what goes up must come down. So if it goes up, it hits the ceiling. If it comes down, it hits the roof, the floor rather, the floor, all right? So when it drops, it came near where buyers are clustered. And one thing about this candle, these sellers intentionally wanted to push price below where buyers are, or where buyers are based or clustered. So the reaction of buyers is simply what's dragged this price back up to near its closing price, right? The formation of the dragonfly with the longer lower tail shows us that there is a high buying pressure in the area. So whenever a dragonfly is formed, it simply shows that below here, there is a high buying pressure. And once buyers are in charge, right, what happens? Automatically, price starts going up, right? So this is what happens when buyers when price come areas where buyers are clustered, price starts selling, yes, price start buying rather, buying and continue buying. All right. So if you can identify this candlestick pattern on your chart, it will help you visually see when support and demand are located, right? So this dragonfly can really help you identify where support and demand are located. And when we talk about supply and demand, sorry, when we talk, supply, that's demand and supply, you will learn more of how to use dragonfly to setting or catching your demand or supply levels, right? Okay. When it occurs on a downtrend, it is interpreted as a bullish reversal signal. So now when this appears on an uptrend, what's an uptrend? This is an uptrend, right? Let's say this kind of setup appears on an uptrend. It is called what? A bullish reversal. Now, why is it called a bullish reversal? it is a pattern or a signal that has the ability to reverse this trend, all right? This uptrend, reverse it back up, all right? Now, this is a dragonfly appearing on a what? On an uptrend move. You see this? This is a dragonfly formed right at this zone. So you see what happened? When it formed, what happened? It reversed the trend and continue the trend upward. All right. So this is what dragonfly does. Dragonfly is a reversal pattern, both bearish and bullish. We'll talk about. All right. No, dragonfly is basically, all right, a bullish reversal pattern. All right. When it happens on a downtrend, when it happens on an uptrend, is regarded as a bullish reversal. When it happens on a downtrend, it is regarded as what? A bearish reversal. But as I always say, you can't trade candlestick pattern alone. All right, it's very important to note that you can't trade candlestick pattern alone. You will need other indicators and tools to determine high probability dragon dodgy signals in the market. All right. So this is for dragonfly. I think my picture already, my examples already covers everything. So you can go back on your chart independently and try to find all of the candlesticks from the one I thought explained the on our last section. That's from the engulfing bullish and bearish down to dodgy. Now we're looking at dragonfly. So you can always remember that what we do here is not enough to grant you a profitability. Or what we do here, or just showing you, what we're doing is showing you the path. So you need more screen time. You need to go back on your chart and pop up your chart, get these zones indicated, right? Get these zones identified, get these signals identified, identify as many as you can until you get tired of identifying it. Remember, this is a hood of it. I don't even know how to elaborate this and make you understand what you have signed up for. But I promise you, if you are diligent and dedicated, persistent enough, you would see the result in no distant time. All right, that is on dragonfly. Now we have the opposite of a dragonfly. All right, something that happened here is the opposite of this. So if this is a dragonfly, that means this will be another. I want you to understand something very clear, very important, that each of those that is, each patterns we show has both ways. That is, it has for its bullish and it has for its bearish. All right, is that cool? So for a bullish, you have a pattern for it. For a bearish, you have a pattern for it. Do not mistake each for another. Do not mistake the bullish for the bearish. Do not mistake the bearish for the bullish. It is very important to take drastic and concrete note of all of these informations. They are very powerful if you can keep to it. All right, so let's talk about the opposite of a dragonfly. So we mentioned that dragonfly is the bearish. This is dragonfly, and it is the bullish, is the bearish reversal pattern. The bearish reversal pattern. All right. So let's talk about the bullish reversal pattern. It is called the gravestone doji. All right. It is called the gravestone doji. I will use this. We call it the gravestone. All right. It's called the gravestone doji. All right. Sorry about that. The gravestone doji. It's called the gravestone doji. That's the opposite of what? Of the dragonfly. We have the gravestone doji. Right. So let's go into that quickly. will display a pattern for that also. So here on my chart, we have the gravestone doji, right? So we have the gravestone doji right here. So this is how it looks like, just the opposite of the dragonfly, right? So let's continue on that note. The gravestone doji is the bearish version of the dragonfly, all right? So the gravestone doji, like I mentioned, is the bearish version. We looked at the bullish version, and we're looking at the bearish version of the gravestone doji. It is formed when the open and close are the same or about the same price, all right? The open and close are the same or about the same price. Remember the psychology I gave explaining the gravestone doji, explaining the dragonfly doji is still applicable or is still valid for the gravestone doji, right? It is just the opposite. This is just the opposite of the dragonfly, right? So if we say that on the dragonfly, that sellers, that buyers resisted price and pulled price up, close it right as near its open price. That is, the same statement can also be used for the gravestone doji. We can also state that the difference between, or we can differentiate the gravestone doji from the dragonfly doji, that the upper longer tail is just a difference, right? So for the gravestone doji, we have the upper wick above, right? Why for the dragonfly doji, the upper wick is now below the close, right? So that is just the only difference. Now, the formation of the long upper tail is an indication that the market is testing a powerful supply or resistance area. It is a very powerful signal that market is testing a powerful supply or resistance area. And what supply is, simply put, areas where sellers are clustered, or areas where more selling activities are being carried out. So anything that happens around a selling domain or a selling cartel is followed back with what? A reversal, right? It simply tells you that sellers are now more in control, or this is the seller's area, or this is the seller's dominating area, right, in the financial market. Remember very well that we have simply two basic movements in the market, up or down. So the up is the home, the up axis is simply the home of sellers, and the down axis is simply the home of buyers. That is why we always say you sell high and what? Buy low, because buyers are low, sellers are high. It's very important you know this. Okay, let's see more examples of that on our chart. So you can see this. You can see that. You can see what happened here. That's the gravestone doji in action. We have the long tail just above, the closing price just around the zone, and then the opening price, right? The opening price, the long tail, the opening price, the closing price. And what happened next is switch reversal, right? So price was coming up all of this direction, and immediately, automatically, a gravestone doji was formed. Look at that. Price dropped all the way down. You see what that does on the market? Like I always say, you should always make sure to carefully look out for these signals or these patterns on your chart, right? Look for them on your chart. Once you've done that, look at how price reacted at the formation or after the formations of these patterns, it will be much more believable when you do it on your chart. All right. So we're showing you a pattern that works. All right. So the chart above, that this chart I'm displaying right here, shows a gravestone doji at the top of an uptrend, after a period of what? Strong buying activity. After a period of strong buying activity, what happened? A gravestone doji appeared. The formation of this candlestick pattern indicates that buyers are no longer in control, right? Buyers are no longer in control of the market. For this pattern to be reliable, it must occur near a resistance level. All right. So when we get to learning about resistance, right, when we talk about those, I think this is a resistance, demand and supply will be on the next phase, on the next badge, right? We'll have a candlestick to talk about on this badge. All right. So let's proceed. I believe it is quite understood on that area. Right. As a trader, let me mention this. You will need additional information about the placement and context of gravestone doji to interpret the signal effectively. All right. This is what I teach you. I will teach you about this in the next chapter. So we have done so far 2 basic important candlesticks. All right. We've done the doji, the dragonfly doji, I beg your pardon, and then we've also treated the gravestone doji. Take note of all of this. Remember also on our previous section we talked about the bullish engulfing and the bearish engulfing, coupled with a gravestone doji and a dragonfly doji. That is a very good candle pattern we've looked at on that on the section so far. So I'm going further to introduce another candlestick pattern. I call this, or this is called the morning star. It is called the morning star. Is on the chart. The morning. Excuse me. All right, so we have the morning star. All right, so this is it. Right? The morning star. Okay, now let's look at discretely what we're talking about on the morning star. Right? I will display as usual to create more understanding on what we are doing. All right, so here we have the morning star. All right, now we need you to pay close attention so you don't get all of this mixed up. Now we have the bearish candle, the bullish candle, the bullish or bearish candle at the base. When we get to the level of learning drastically what supply and demand levels are, you will know how to using the morning star pattern to determine what's a very profitable demand level. Is that cool? But now for the meantime, let's talk about what the morning star is. All right. The morning star pattern is considered as a bullish reversal pattern. All right. The morning star pattern is considered as what? A bullish reversal pattern. What do we call bullish reversal? When a candle or when a pattern is a bullish reversal, it simply means it has capacity, it has the power to what? To reverse a trend going up. Okay? A bullish reversal pattern has the power to reverse a trend, a downtrend. Okay? A bullish reversal pattern, I repeat, has the power or the capacity to reverse a downtrend. So whenever a bullish reversal appears on a downtrend, it simply tells you that the price or that trend is likely going to what? To reverse. Okay? So the morning star pattern is considered a bullish reversal pattern. It often occurs at the bottom of a what? Of a downtrend. And it consists of what? three candles, like we mentioned here. The first candle must, I use that term, must be a bearish candle. The second candle does not matter if it is a bullish or a bearish, right? Then the last candle or outgoing candle is a must. It must be a bullish candle, all right? So the morning star pattern consists of what? Of three candles. The bullish candle, the base candle, which can either be bullish or bearish, and the bullish candle, which must be bullish. All right. So the first candle is bearish, like I mentioned, which indicates that what? Sellers are still in charge. All right. The first candle simply means sellers are still in charge. Remember when we talk about long candles, which we mentioned that long candles most times means what? Momentum, means strength, right? If it is a bullish candle, it simply means that buyers are still in charge. If it is a bearish candle, it simply means that what? Sellers are still in charge, all right? So the first bearish candle simply means what? That sellers are still in control of the market. So the second candle is a small one, which represents that sellers are in control, but they don't push the market much lower. And this candle can be either bullish or bearish, like I mentioned before. Now, the last candle, which is the bullish, the third candle is a bullish candle that gaps up on the open and close above the midpoint of the body of the first day. All right. So this candlestick holds a significant trend reversal. Right. So the morning star pattern shows us how buyers take control of the market from the sellers. All right. When this pattern occurs at the bottom of a downtrend near a support level, it is interpreted as a powerful reversal pattern. I am emphasizing on this so you can understand. All right. So when this candle pattern appears on the down or on the low or below a downtrend near a support or near a demand level, it simply tells you that buyers are now in charge, or it simply tells you that this is the home of the buyers, that buyers have, this is their dominated area. You get that point right now? Right. Let me show you more examples of what happened after a morning star was formed. Now, this is what happened. You can see that. You see that? This was a downtrend all the way down to this level. And then we had this, okay? Then look at what happened. All right, we have the bearish, what must be a must. We have the base candle and the outgoing candle. And what happened there? Buyers took control of the entire market and pushed price right above this area of price. It is very important you take note of all of these formations and the psychologies behind it, right? So the chart I just explained or I displayed right now helps us identify the morning star pattern and how it is significant when it is formed at the bottom of a downtrend, right? At the bottom of a downtrend. It must appear at the bottom of a downtrend. If it must be a morning star, it must appear at the bottom of a downtrend. As you can see, the patterns occurred at the obvious bearish trend. The first candle formed the seller's domination. That is this candle. This candle that is formed, the first candle confirmed the seller's domination. And the second one produce indecision in the market, then the second candle could be a doji or any other candlestick. It just doesn't matter. But here, the doji candle indicates that sellers are struggling to push the market lower. I mean this, right? This doji candle indicates that sellers are struggling to push price lower. But what happened? Buyers took control of sellers, and the market is likely to reverse. Remember that we almost talked about this doji, this formation right here, this base. We talked about it on the last. We could name this what? A dragonfly. You see that? Everything we learn is coordinated, and it has a link to one another. If you fail to understand anyone, you will have a shaky foundation. You want to understand that, right? So this is a dragonfly doji that appeared there, which of course simply indicates to us that sellers try to push price lower. But what happens? Buyers said, this is our territory, and what took over sellers and reverse trend. All right? So this is how professional analysts, these are professionals analyze the market based on what? Candlestick patterns. And this is how you will analyze financial markets. If you can master the anatomy of candlestick patterns and the psychology behind their formations, right? So if you can understand it, I'm absolutely going to tell you that there is literally nothing you cannot attain. So let's talk about the opposite of this, which is called the evening star. All right. Remember, I said on my specs on the previous section, or when I started this section, that each candle pattern we introduce has is what? Bearish and is bullish candle. So we've talked about the bullish candle, which is the morning star. Let's look at the evening star before we call it a section. All right, now, this is called the evening star candlestick pattern. Make sure you are taking note of all of this. It is very important. The evening star pattern is considered as a bearish reversal pattern that usually occurs at the top of an uptrend. Where does this occur? It occurs at the top of what? A downtrend. The pattern consists of 3 candlesticks, just like the morning star. The first candle must be a bullish, that is, must be rising, must be a candle that is going up, right? The second candle is a small candle. It doesn't matter if it is a bullish or a bearish. The third candle is a large candle, all right, and must be what? A bearish, all right? So this is how it should look like, all right? So just like you have a wall above, a wall by the side, and then a base behind, and the base, all right? So the first part of an evening star is bullish. The first part is bullish. This means that bulls are still pushing the market higher. And you can also look at it with the anatomy of this candlestick. Remember, from the very first day we introduced candlestick, I mentioned that candlesticks have different bodies and sizes. We have the small size candle and the longer size candle. And I mentioned vividly well that longer candle means pressure, right? It means momentum in the financial market. And what that means is that either a bullish or bearish has more power, right? So if a longer candle is bullish, that means sellers are more in control. If a longer candle is bullish, that means buyers are in more control. If a longer candle is bearish, that means sellers are in more control. I hope that is clear. So this means that buyers are in more control at this tough time, right? So right now, everything is just going all right. The formation of the small body shows that buyers are still in control, but are not as powerful as they were, right? So this means low activity, okay? So the third bearish candle indicates that the buyer's domination is over, right? And a possible price trend reversal likely what to happen. Now let's see what an evening star can do on the top of a what of a of an uptrend. Let's look at that. So look at this. Look at what we have. I know about this. So look at what we have here. This is an evening star formation right here. Price was coming what up all the way from here. We're having a higher highs, higher lows, higher highs, higher lows, higher high, higher low, higher high, higher low, higher high, until this candle formed right at this face. And what happened after that? A trend reversal, which took price right below to this zone, right? So today we have looked at carefully three important, I think three, right? Okay, we've done two important candlesticks, looking at the opposite and looking at each of the candles opposite. That is a bullish and a bearish, or a bearish and a bullish. I talked about a dragonfly. I talked about a gravestone doji. I talked about morning star, and we talked about an evening star. To refresh your memory or refresh your mind, we are still on candlestick pattern. We started off from bullish engulfing candlestick pattern to bearish engulfing, and then we talked about the doji. Then we looked at today dragonfly doji, the gravestone doji, the morning star, and we are wrapping up on this section with the evening star. On our next section, we will continue. Do have a wonderful day and enjoy the rest of your week. Bye for now.